Good morning and welcome to Mark Putrino's Trading Research. I am Eric Adams. I have friends in Turkey for sure, and that's Mark Putrino. Good morning.
Oh God. Yeah. So what does that mean? Your suit's only going to be $9,000 instead of $10,000 though?
I don't know. I know he's got himself in some trouble.
You know what? He's a friggin' he's what they call a dandy. It's like the dude is so into his appearance, it's like, and to me, I don't want to sound like an idiot, but that's kind of a sign of shallowness to me. When it's like, your fingernails are manicured, not a single hair out of your, is out of place. It's like, he's just a dandy. Like he thinks people are going to sit there and look at him and be like, oh, you're such a great dresser. Wow, you're so great.
Good morning,
Yeah,
Jeannie.
yeah, I'm sure Jeannie knows all about it, being a Long Islander.
Oh, Eric Adams and his Turkish friends. Good morning, Di.
So let's see. Surprised that's not on the cover of the New York Post.
Hey, Jeannie, will you email me at education@stockmarketjobber.com so I can send you the free options education?
Yes. All right. Oh, here we go. Adams Fundraiser 20 rise in New York Democratic politics. Okay, so I guess that means she's probably having sex with someone. I mean, that's how that's how Vice President Harris worked her way to the top. So maybe she's just following her footsteps. All right, she was elevated to the post of special liaison. Yeah, that's such a so freaking crooked. Well, it's going to come out. You know what? I wanted to bet it comes. I think it would be great if it comes out that he. See, look at him. Like, every single thing is It's like Anthony Blinken and what's his face? They're posing for their LinkedIn photos over when the war came out,
right? Smiling like they stole something. Of course they have. They've stolen all our money.
But just pathetic people. Just really pathetic what's going on in our world right now. It's like, so we're negotiating with Iran at the same time as they're attacking us.
Yes.
It's just,
like 30 something attacks so far in the last 2 weeks, and nobody's doing anything about it. But let's get into the market. Let's get on to some happier things, like making money.
All right, let me see if I can bring my charts up here. Trans trading view. Wow, big move in the bonds yesterday. That's really what drove this price higher. Let's see here. So let's go to SPY. Yeah, so look at that move, and there's really. So this is going to be basically based on interest rates now, and I think so. The S&P is at 430. I think this level here is going to be our next stop, probably 437. So, I mean, there's going to be some upside in there. And now keep in mind, it is Friday, so a lot of people probably won't be too aggressive because they don't, you're not going to want to take your long positions home over the weekend because there's just so much that can go wrong over the weekend. Yeah. But I would think maybe next week we end up getting up to there because a lot of these sectors are looking pretty good now, right? It's a complete opposite than where we were 2 weeks ago, but that's what happens. Things change. We don't really take, as traders, we don't really take long-term views. And we don't really want to have long-term views because they're going to alter the way we think. So tech here, there's a little bit of give back this morning, but considering this move up over the last 4 days, some profit taking here is not like an unusual thing. All right. So that looks pretty good. Healthcare was looking very, very healthy. Healthcare, healthy. No pun intended. Wow, look at that. Yeah, you see, so here's a really good example of why we do what we do, right? So what are we trying to do? Well, we're trying to figure out where markets are going to move so we can make money, right? So what goes on when we're in a steep free fall like we are here, or we were here, I should say, starting on October 17th, going to this steep free fall. And where do we happen to find support? Coincidentally, did the market gods or, the ether or out of the matrix, did they just come out and say, oh, we're going to pause the market down around 124? No, it stalled out here because it was support back in March. So there's people who sold back in March who regret their decision to sell when the price moves higher, and they tell themselves, all right, I made a mistake. If this thing gets back to my level, I'm going to buy it back. So you get these remorseful sellers from here placing buy orders over here, and it forms support. So it's not a coincidence. Just like it's not a coincidence that the market found support here, which was a support level back here. For whatever reason, this ETF likes the 127.40 level. It likes the 123.80 level. It just, the levels in between just aren't as important for this particular ETF. It just kind of blows right through them like they're not even there. Even up here, you can see this particular price level, which is 132.50. For whatever reason, the market likes this. Resistance here, support here. And here's the thing, right? You can't take for granted how an amazing and a phenomena this is, because we're talking about a market that's worth like trillions and trillions of dollars, and it turns on these precise levels. So now we're probably going to run into resistance around this 127.40 level because it was support. So there's people who bought at the support level who regret their decision once the price moves lower, and they tell themselves, man, if this gets back up to my level, I'm going to sell. So if you get enough remorseful buyers placing sell orders at the level that was support, it turns into resistance. So that will be our next step there. So knowing where these price levels are is, I mean, it's not perfect, right? It's not a guarantee, but it gives you some idea as to where things are going to turn. These important price levels are like, they're like a fork in the trail or a fork in the road. When we get there, we tend to go one way or the other. So this has a little bit more to go, but it looks like it's going to be kind of, probably going to be stalling out there. Let's see, XLF. We'll look at our financial sector next here. And this has a little bit of a ways to go too. So here's your classic breakout support. Then it became resistance for 1, 2, 3, 4, 5 days. What is resistance? Resistance is like this large group of traders or investors who want to sell at or close to the same price. In this case, it's 32.40. So when we break above that, what does it tell us? Well, it tells us that those traders or investors who created the resistance with their sell orders are out of the market. They're out of the way. They either finish their orders or maybe they cancel their orders. But regardless, when you take supply out of a market, it sets the stage for a move higher. Now, I will tell you this. These moves are really, really strong, and I would suspect that there's going to be some kind of a reversal. But I do think we got a couple points ahead. But once these things start, like once healthcare gets up to there and financial gets up to here, what about tech? XLK.
Sean, did you get your email with the options education?
Yeah. So, all right. So we got XLK looks like it could get to there. Healthcare looks like it gets to there. I mean, it's pretty much almost there. And then financials. So you see what I'm pointing out here is that our three biggest sectors have a little bit of upside, but they're all getting close to what's probably going to be resistance. And with really big gappy moves like this, there's, my thing now would be I would be waiting for us to get to these levels, and then I would be probably be playing the reversal, because these are just really, these are almost like short covering moves. Markets that go up, like generally go up nice and slowly, but markets that really rip higher like this, where it's like panicked buying, it's generally short covering. It's like the opposite of panic selling. When people buy, people are generally like, all right, well, I'm kind of hopeful, like more like this kind of goes up slowly. when you get this, it's like, oh God, I'm either getting crushed on my shorts or I'm afraid of missing out. All right, so we got tech, healthcare, financials look like they got a little bit of ways to go, but we're all getting close to what's probably going to be pretty meaningful resistance. It's like if we look at the market, if all three of those sectors hit resistance simultaneously, you're talking about, in terms of percentage of the market, you're probably talking about 60% of it in terms of weighted.
That's a lot.
All right, so now it looks like consumer discretionary might be having a little bit of a breakout, but I could see this running into resistance up here. So this is approaching resistance. Consumer communication services. All right, this is a little choppy. What's that, dude?
I said that was nasty looking chart.
Yeah. All right. I think this has a ways to go, but we can't let this remember the scale here. This is like 66.50 and this is like 68. So this is not a huge, this is a bigger move than it looks. So XLC, maybe have a little bit of room to run there. I'm going to look at our industrial sector. I mean, this just powered right through. So this looks like it's got a little bit of move to run. So actually, what is the S&P doing this morning? Did we even look yet? I think we did, but
it's 430.41 I have on my trading. I mean, on my TD.
Yeah. So it's unchanged. So after having a huge move and then being unchanged, that's some pretty positive action there. All right, let's look at some of these other things. Consumer staples. So this has made a nice turn. So now we can, you see this, right?
Yeah.
So again, we found support at a level that was support before. We look like we've really kind of turned. Look, I even had this arrow in here the other day because I kind of had a feeling, something stays at support long enough, and then all of a sudden the buyers start to kind of think, oh, there's other buyers around. So this would be a good sector to look within for potential trading names, because it's a sector that you can see is like kind of breaking out here. It's made the reversal. So we can go ask ourselves, well, what is in the consumer staple sector? I got to tell you, man,
Coke and Pepsi, for sure.
After walking around Manhattan on Friday night, it's like Adams should just resign, because the city is in shambles. There's garbage everywhere. There's homeless people everywhere. And he's probably out at some nightclub with like some famous people.
Well, that's all he cares about.
Friggin' dandy.
They're from Turkey.
Such an asshole. I'm sorry. Such a fool.
Yes, that's a better word.
But at least he's standing up to Biden, because New York City is basically just being destroyed.
Well, that's why the FBI went to his house. Come on, man.
Ah, you're correct. I didn't even think about that. So he stands up against Biden, and now the FBI's after him.
Hunter wrote an
op-ed. He's going to be getting audited.
Hunter wrote an op-ed about how they were treating the family bad.
Hunter wrote an op-ed?
Yeah, I saw it this morning. I didn't read it because I just can't.
Like where? Where would that be?
In the Washington Post or something, or the New York Post, or whatever the lefty rag in New York is.
Well, they're all lefty rags except for the Post.
Whatever one that belongs to the CIA and the government.
Why is Hunter Biden writing an op-ed? Who the hell cares what he has to say?
We're about to get to see him in front of Congress, hopefully, with those checks, 10% to the big guy.
Yeah, they're done, man. They're done. And it's going to be a great day in American history when he steps down.
Well, the cleanup, though, man, you got a lot of people that have helped him. So if you haven't gone and blown the whistle, you're complicit. So then you're the same problem as him. And we got a dirty government, top to bottom.
I think kind of the ironic thing is that Biden is everything all the Trump derangement people thought that Trump was.
Yes. Yes.
Which he's not.
Yes.
Biden's a racist. Trump is not a racist. Biden doesn't have any core principles. But Trump does have core principles. people think Trump is this big right-wing conservative. I mean, he spent most of his life as a New York City Democrat. People don't realize that.
Well, and listen, here's the thing. In business, you can't pick a political party. You just can't. You have to be agnostic. It's the same thing with trading stocks, especially if you're in a business like that where everybody is in the Democrat Party in that city and you want to rise up through the ranks. You have to act like that and emulate it. It's just the way that is.
I mean, they're saying he overvalued the portfolio. Name one real estate magnate or real estate person in the history of mankind that didn't overinflate. And it's not like I don't know. I don't even want to get into it. I just think it's just such a travesty of justice what they're doing to this guy.
And that is the truth, Winward Smith. Whatever they accuse you of, that's what they're doing.
It's just such a, and it's like no one has the, it's like where does loyalty to your country and loyalty to the people that you represent, like where does that trump, no pun intended, but where does that trump like your party, taking the party line?
Your morality to the truth. I mean, my God, you have to be real. I mean, I don't know. I guess you can be as fake as you want to be. But to me, if I want to get the most out of this life, people are going to see me for who I am and what I am, and they're going to get the real me every time. And that's just the way I have always been.
Isn't there a Democrat out there that says, well, wait a second. This guy bought a $10,000 mansion after he was a senator for 10,000 square foot mansion. 2 years after he became a senator, he's got 20 shell companies set up. He's got 82,000 emails and false names. They're literally charging Trump with a crime for tweeting something.
Yeah. But Swalwell tweeted the same thing. Swalwell's called for Trump to be taken care of, and they don't say anything about those people. Explain it. Explain how you can have such hypocrisy.
Oh, did you see the guy from the president from was it the Dominican Republic? Like diss Biden? Let me see this.
Well, I know De Silva did when he blew De Silva off.
No, dude. This was like a Dominican Republic restaurant.
And my tank commander was a Dominican Republic guy. I mean, from the Dominican Republic. He was so funny, man. I love that guy to death.
I don't know. It was somewhere. Oh, yeah. Okay. 10 hours ago. Yeah. So anyway, so he's meeting with this guy, and this guy makes a crack about like he dissed him. He made a crack like, oh, our beaches are nicer than the beach that you hang out on. Something along those lines. And because it's like, like there's war going on, there's American hostages, and Biden's out at his beachfront resort.
Mark, the simple fact that they're asking Israel to pause for a minute. We don't want to use the word ceasefire. So let's use another word because, words matter. Let's use pause and then allow these people just to regroup. Let them get everybody back.
Oh, all right. Stupid. All right. So check this out. So this is like this total diss. So this is the president of the Dominican Republic, right? And you had to see it because you can kind of just tell by the way he smiled. Mr. President, we look forward to welcoming you soon to the Dominican Republic at the next Summit of the Americas in 2025, and where we will continue, blah, blah, blah. And that summit will be in Punta Cana, so you have time to be on the beach. That's such a fucking... I'm sorry. I don't mean to swear. It's such a diss. I really try not to swear because working on trading desks all those years. All right, anyway, so let's look into it here. So a couple things right off the bat that we can see. We got our clear support level. Just like we saw before with consumer staples. And yeah, so you know what? Before we're done, we're going to look in the consumer staples sector and the utility sector again.
Yeah, that utilities.
I think there's going to be some trades in there. But anyway, so we get to support around 480. What happens? We sell off. Remember, it's not a coincidence that there's support here. There's support here because there was support over here. So you have people who sold and the price goes higher and they're like, damn, I made a mistake. I want to buy my shares back. We get down here. Now think about this. Why do things rally off of support? Like here. Well, you got traders who want to buy or investors who want to buy, and they're kind of just watching, and they're watching this thing go lower and lower and lower. And think about it. If something is moving lower and you want to buy it, there's really no rush. You can just kind of wait and watch. So, you're just watching and trend lower. All of a sudden, oh, what the hell? It stopped trending lower. We know that markets go lower because there's not enough demand or buyers to absorb all the supply. So when the market stops moving lower, the traders who are watching this thing say, hey, we're not trending lower anymore. Therefore, there must be new buyers coming into the market. Oh, I better start to get active. Wait a second. I was willing to pay 480. Someone else is coming along and they're willing to pay 481. Wait a second. Someone else is coming along and they're willing to pay 482, and so forth and so on. So you get this snowball effect. So this is like a technical move. And you know what? I want to bring up this. I think this is a good thing for visual, because it doesn't really happen anymore because of everything's done electronically. But if you look at, let's see, NYSE historical floor. All right, so I just think that this makes it easier to visualize. So let me see if I could find a good picture here. All right, yeah, this is a good one. This is in one of our lessons too. Actually, oh, look at that. Now it's got photo stamp on it. All right, so that's not really a good one either. Let me find one that's.
Well, I bet that was a
All right, let's just say this.
in the middle of that crowd.
All right, so now this is the old days, right? This is probably, I don't know. Oh, it says right here, 1940s. Now this doesn't really exist anymore, okay? Because now everything is electronic. But in these days, basically, the New York Stock Exchange was the only game in town. I mean, there was the Boston, the Philadelphia, but they were like 1% of the volume. So here's the way that this would work, okay? So I'm the head trader of a big shot hedge fund, but hedge funds actually didn't even exist back then. So let's just say I'm the trader of a big shot mutual fund. Oh, wait a second. Mutual funds didn't exist back then. I think there was one. All right. I'm the head trader of some big institution. Now, a hedge fund, it doesn't necessarily need to be a standalone thing. A hedge fund could be part of a larger institution. For example, the last place that I was the head of trading at, we had mutual funds, we had hedge funds, we had traditional institutional asset management. So I don't know why people are so fascinated with this whole hedge fund concept. But anyway, you guys can ask me or tell me. I would probably appreciate that. Maybe one day we'll have a Zoom call. But the way it works is if you're a money manager, right? If you're a retail trader, if you have to execute your trade through a broker dealer, that's just the way it works. That's the law. You can't, if you're a hedge fund, you can't just say, oh, you're a hedge fund, you want to buy XYZ, I want to sell XYZ, I'm just going to send it over to you. It's got to go out onto the exchange and it's got to get traded through a broker. There's a lot of reasons for that. Like they have to prove that you're trying to get the best price for your client and so forth and so on. But regardless, so this is the way it would work. I would say I want to buy 100,000 shares of IBM. I call up Goldman Sachs. That's their broker dealer, and that's what's called I would call their upstairs, what's called their upstairs desk, which basically just means it's in an office somewhere. I would say, hey, listen, Dan or Rob or whoever I used to talk over there, I got to buy 100,000 shares of XYZ. They would call down to the floor, and it's hard. I know it's hard to see, but if you look along the edges over here, there's like these booths. So those were the floor brokers. So the guy from Goldman Sachs would call his floor broker, that's the term, floor broker, and say, hey, I got to buy 100,000 shares of XYZ. That floor broker would walk over to whatever post it was traded at. Now, these are called specialist posts. This here you can see is number 5. That's number 6. That's number 7. Every stock was traded by a specialist or monitored by a specialist. All right. They're the ones who kept track of all the trading. So if you wanted to trade XYZ, you needed to go over to the post where XYZ was trading. So let's just say this XYZ was right here, floor or specialist number 6. These guys are called specialists. Specialist number 6 is in charge of trading XYZ. So all the people that want to trade XYZ, their floor brokers are going to end up over here at this post, right? They have no choice. They can't trade it over here. They can't trade it over here. They got to trade it in front of the specialist so the specialist can keep track of it. Now, think about this. So you're in this crowd you're the Goldman Sachs floor broker. You get this order. You come over. All right, I got to buy 100,000 shares of XYZ. You come into the crowd. Now, you're not going to come into the crowd running, being like, hey, I got to buy this. I got to buy this. Because you don't want to spook the market.
Yeah.
You want to come into the crowd and get a sense of what's going on. All right. So if there's an equal number of buyers and an equal number of sellers and it seems kind of chill, you're just going to be like, okay, all right, I got 100,000 shares to buy. The last price was at 80. The last price was at 80. It looks like there's a lot of sellers around. Things go kind of cool. Now, say you come into the crowd and you got to buy 100,000 XYZ, and all of a sudden at the same time, a couple other floor brokers show up and they got to buy XYZ. And then the person who was selling XYZ, they just finished their order. So they left the crowd and they went back to their booth. So now you're in the crowd and you're just like, wow, there's 10 people in the crowd here. There's only 2 sellers, but there's 8 buyers. So I'm afraid one of those other 8 buyers or, one of those other buyers is going to jump ahead of me. They're going to raise their price. Well, if they raise their price, that's who the seller's going to go to. So the stock's at, what did I say, 80?
Yeah.
So the stock's at 80. You know what? Hey, listen, these guys are willing to pay you 80. I'll pay you 80, 81. And then someone else says, wait a second, this is a little bit higher than my client wanted me to pay, but I don't want to miss out. I'll pay you 82, right? So you get this kind of like group of buyers are kind of like outbidding each other. And that's why when you get to support, you tend to rally. Now I would assume that everyone who's listening to me right now probably didn't trade with specialists and floor brokers, because that ended like 25 years ago, pretty much. But when you think about it in that sense, it's easy, I think, to kind of comprehend how, we get to this level, things are cool. All of a sudden, sellers leave the crowd, buyers want to pay up. These floor brokers, they don't care why you're buying. They don't care why you're buying XYZ. They don't care what the price to earnings ratio is. They don't care what the news is. They just know that it's their job to go in there and to buy the shares. It's not really their job to question why you're buying shares. So they go in there and they say, oh man, I got the order when the stock was at 480. Now it's trading at 481. You know what? I'm going to bid 482. It's $2 above where I got the order, but if I buy it, if I don't buy it and then it goes to 485, I don't want to have to call my client up and say, hey, dude, sorry, I missed it. It's up $5, because then the client's going to get really pissed and probably say, screw you, I'm never going to trade with you again.
Yeah, that was a great explanation, Mark. Let me ask you this: the specialist there that's working the post, is he by himself, or does he have a team of people that are just collecting the information and then giving it to him so that he can keep the chart?
Oh no, they have teams.
Okay.
Like the specialist is in there. You see these guys sitting down. They're probably like the clerks.
Okay.
Remember, this is like pre-computer.
Yeah. That's what I was wondering. I'm like, there can't be one way that one guy runs that whole post.
No, it's so the specialist would be on the inside, and then these guys. And now, don't forget, the specialists are trading as well, right? They're like modern day market makers. They're not just there to
make
just to
monitor.
monitor.
They're making markets and making money as well.
Yeah, and they could lose money too, because like there are laws, and even now the market makers, like if you're a market maker and the stock that you're making a market in falls X percent, 20%, well, you legally are obligated to buy a small percentage of that.
Wow.
So when the markets crash, a lot of these specialists get put out of business. But these guys can make pretty serious money because they know where all the bodies are. Like, and I'm not saying it's illegal, but let's just say you're the specialist, right? and 10 minutes ago there was 15 guys came over to your post and said, I want to buy, and there's no sellers around. So they just say, all right, you know what? I'm going to just wait 20 minutes. I'm going to come back. Then another floor broker comes up and says, hey, listen, I got 100,000 shares to buy. Are any sellers around? And the guy's like, you know what? The specialist could say, I'll sell you, I'm going to sell you the 100,000.
Gotcha.
Or actually, you know what? I got that backwards. Like say a bunch of buyers show up and then they leave, and then someone else shows up and then they're a seller. Well, the specialist can say, okay, I'll buy the shares from you.
Gotcha.
Because the specialist knows there's 10 other buyers around. So when those buyers come back, maybe the specialist turns around and sells it. So the specialists monitor the trading, but they also can use their own capital to trade.
Well, that would have been
and back
the deal.
in these days, dude, like these guys, this is the pinnacle of Wall Street back in these days in the 40s, the floor brokers and the specialists. Like these guys, half of these guys probably went to work in like a limousine. This was like the modern day equivalent of like what a hedge fund manager is. This was like the top of the food chain. Like a lot of these guys are probably Harvard, Yale guys. Whereas when you got into like the 80s, education really didn't matter anymore. It's, no one cares if you went to Harvard if you can't keep track of 10 trades at the same time. Like these guys are really, really smart guys. They can keep track. I mean, I could never be a floor broker.
That's the thing,
I
is keeping track of it is the amazing part, because you have to really be sharp. And a lot of these guys, I mean, I'm sure back here and they weren't, but most from what you hear, they're all dope. They're all dopers.
Dopers?
Yeah, like on cocaine or something like that.
Nah,
not anymore.
Not these guys.
No, not those guys. But I mean, nowadays you see it like the way that it is. Like what was the movie? Gordon Gekko, Wall Street.
Oh,
yeah, where
Wall
they're
Street?
partying wide open. That's, you don't know how they could keep those numbers together in their head when they're partying like that. Of course, they're using computers now, so I guess it doesn't matter.
Yeah, and I think they kind of say that for, well, when you talk about a trader, there's a lot of different kinds of traders. There's dozens of different. Floor brokers are called brokers, but they're really traders. You could just call them a floor trader,
Right?
Specialist. My father-in-law was a floor broker, and he was a guy. He didn't even graduate from high school, and he didn't graduate from high school. He went and he fought in the Korean War, got back. Somehow he befriended someone who was like, hey, I think he was like putting in floor, or no, he was installing carpets, and he met a guy that said, hey, why don't, you're a sharp guy, you're smarter than you could be doing something a lot more intellectual. And he was like, come work for me on the floor. And my father-in-law, not educated, but friggin' sharp as a razor. And here's the thing. This is like what's so hard about it, is keeping track of, all right, this guy's doing this guy's doing that, I'm doing that, this guy's doing that. And they're not just trading one stock. In the floor broker's pocket, he might have tickets for like 20 or 30 different stocks.
Right.
And he's got to just got to know. I'm not saying these guys are people that talk about like, how Einsteinian physics teaches us how gravity bends light waves, but these are guys that could keep, like just sharp, just sharp guys.
Rolling numbers.
Like a lot of the modern guys, believe it or not, like this is probably the era where you were still highly educated. You get into the 60s and you get into the 70s. You know who a lot of these floor brokers were? These like, sharp kids from like Brooklyn.
Yeah.
Or, like street kids from like Brooklyn. Guys that the same type of guy that would be like a bookie or like a drug dealer that can keep track of all this stuff going on. If they went straight, they would be down here. But anyway, going back to the psychology, it's like these guys come into the crowd, they're reading the crowd. And I think if you think about it like that, it makes it much easier to understand. Now we get the opposite. So say that the floor broker comes into the crowd and is like, oh, look at this. There's some other sellers around. Oh, I could buy all I want. It's a resistance level. There's sellers around. Then some of the other sellers will start to look out in the crowd and say, wait a second, all these other sellers are coming into the crowd. Well, I can't snooze. I can't snooze. I don't want to lose. It's at 500. You see 3 other guys coming into the crowd that are all got big sell tickets. And there's one guy who's a buyer. Hey, dude, you know what? Just traded at 500. I'll sell to you at 499, and someone else comes in and says, oh, 499. And that's, That's what makes these short-term moves happen. It's the psychology. It has nothing to do with like the news or, or whatever they're talking about on CNBC. It's just the psychology of the traders. Now, we don't have floor brokers anymore. I mean, they do, but they're really just, for the purposes of media. But it's the same kind of a thing electronically now. Instead of people looking at each other's tickets and each other's facial expressions, they're looking at like the order screen, and they're seeing, oh, bids are building. If you have like a professional trader, thing, you could see like different exchanges. There's bids popping up, and you see offers coming in, and there are ways brokers can advertise, like I'm a big seller of this or I'm a big seller of that, stuff that like the retail trader is never going to have access to. But you don't really need to, because you're not trading that same kind of size. But obviously, we got clear support here. We got clear resistance at 500, nice round level. They don't report, so this isn't any earnings. So we're kind of right back here now into the middle of the range. So from this time frame, 500 and 480 are pretty clear levels. So we go to a shorter time horizon. And what do we see here? Well, we can see that this is the 5-day now. So this would be an important level to watch, 482. See support. Resistance, support. That would be pretty clear. This one up here, that's pretty clear. Well, that's our 500 level. We're trading right here. So I would probably mark that. So now if we go to the 1-day chart, which is just yesterday, so this kind of tightens it up a little bit. So I would be looking at 400 on the upside, and I would be probably looking like right there, 498. So resistance, support. And where are we trading this morning? Pretty much, I think, right at 498. No, actually, we're down to 491. Ooh, this thing really got shellacked. All right, so that makes our life easier. So I see, all right, so you see where it's trading now is right where yesterday's low was. So I would be watching, if I was trading my short term, my upside target would be around here, and my downside target would be pretty much right where we are now. So
that resistance hold up above that gap mark, or that support, sorry?
I don't know, but if I was trading this, these are the two levels I'd be key on. So right now the stock is trading right around here. I'll make that red. But notice how these are the important price levels, right? So close right to the close here, and the low yesterday. So pretty much the peak towards the close on what's today, Friday? On Wednesday, and then the low. So yeah, so this is what I would be looking at. If we got down to there, I'd be looking for a little bit of a bounce around 490, and if we got up to around 490, 350, I'd be looking for selling. But a lot of that's going to be driven by what goes on in the interest rates markets over here. Yeah, so look at this. So interest rates are down again. So wow, another big move. So that's probably going to set the stage for another rally. So I mean, my guess would be that Intuit's going to be higher just because of this. So this has probably got the whole market moving higher.
Get a question from Avi too.
Yeah, you see, we're up. Before we were kind of unchanged. Now we're up about 40 basis points. Oh yeah, that's right. Apple reported. Yeah, I mean the market, of course. Yeah, I mean Apple could go down and the market could go up. Where is Apple? 175. See, if we look at the market, right? Let's go take a look at this. Now, Apple obviously has a big influence on the broad market, but this is the S&P 500. Okay, and these are the biggest weight. This is the biggest weighting. So these are This is a 500 share index. And notice how Apple and Microsoft, the two of them together, are about 14.5%. So these guys do dominate, but they're not like so dominative, if that's the right word, dominative, that they can't be outweighed by other parts of the market. So yeah, I mean, there are scenarios where tech could be going down, or where Apple and Microsoft could be going down, and the rest of the market could be going up. But it's just important to pay attention to them in general, because in general, and everything is in general, there's no hard fast rules. You got a 500 stock index, and you got two stocks that are almost 15% of it, right? And then if you add in Amazon and Nvidia, you got four stocks that are literally a fifth of the market. Now, if you look at, so the answer to your question is that the market can go up, but you should always pay attention to Apple, because it's got just such a high weight that in one way, shape, or form, it's going to influence other things. But it's not a hard and fast rule. You know, if you look at the tech sector. Oh, that's healthcare. If you look at the tech sector.
Well, we got to look at utilities still too.
Oh yeah. See, now look at this sector. Look at the domination here. So between Microsoft and Apple, oh, look at that. Microsoft is actually bigger than Apple now. How about that? Amazing. Like, this is like 45%. So Apple's going to have a really profound effect on the tech sector, and the tech sector could have a profound effect on the broad market. But I don't want you to think like just by watching Apple you can figure out what's going on in other places. So the market could go up, but it would be much harder if Apple goes down through. If Apple was flat, you know. Well, I mean, I think you know what I'm saying.
Yes, I do. Maddie says TNX is right at support, right? No, Maddie, it's not. It's broken support.
I think Maddie's looking at a shorter term thing.
All right.
Yeah, like right there.
Yeah.
Yeah, so let's turn this over, because remember, we're looking at the chart of the bond. So yeah. Yeah, I mean, I think this probably gets a little, I mean, this is really kind of overcooked here. But this is probably like a short covering rally. So I would suspect that is support or resistance. It's confusing because we're looking at the inverse, but yeah, I think so. But I don't think it's major. I think it's kind of minor, but it could put a pause on it there. I gotta just make sure to invert this thing because I get confused. Yeah. So, all right. So Apple. I mean, Apple is down, I guess, on their earnings. I mean, the levels really here aren't as clear, but I guess, I mean, 174 is important. That goes all the way back to here. So there's going to be some vested interest at 174. So that's probably where I would consider buying some for just kind of a short-term bounce. Assuming that rates, if rates continue to go lower, the market looks strong short-term. I mean, I don't think I would buy it here, but maybe down around 174. And then on the upside, I would pretty much just look at yesterday's closing price, 177.50. But remember though, so this is where we're trading. It's okay to stay on the sidelines if you're not really sure, if something really doesn't really stand out to you. And to me, this kind of really doesn't really stand out to me one way or the other. I mean, if I was an Apple trader, I would probably just be on the sidelines here. But important levels to pay attention to are recent highs and recent closes. So here's our 5-day chart. And recent close from yesterday was around 174. And then same thing, 177.50. And then this is where we're trading this morning, like right there. So like we're kind of right in the middle. I mean, if you want to get real precise, you know, you may want to consider yesterday's closing price, which was right there. So think about it. There are people who bought this ahead of earnings that are like, oh, yeah, Apple's going to have good earnings. And then this morning it's down here. So there are people who bought on yesterday's close. There's going to be a bunch of them who are going to be trying to get out. So there's a good chance that this support will turn into resistance. Yeah.
All right, we got to do XLU, and then we got to do the gases and oil and natural gas.
All right, so let's do. Wow, it's 8:40. All right, so look at oil. You know, I mean, oil had a little gap down, still kind of gravitating back towards this level here. Look at this 83.20, how important it is. So, you know, I would just be a little bit leery of taking a long trade here. So again, this is probably something. Well, let's pay attention to this now. Forget what's going on in Israel. If support here turns into resistance over here, then there's a good chance it sets us up for another move lower, just like support here became resistance there. But I've been all right. Well, anyway, so that's where it is. I don't want to confuse people. Because to me, I mean, a lot of the stuff I would just be on the sidelines. I mean, it seems to be a pretty confusing market right now. All right, so here's natural gas. Here we have a good example of what was resistance became support around 340. So that's your level there, 340. If it looks like it's going to break, we go on the short side, and then look at the top of the range here. So this is becoming kind of a pretty well-defined range now. So it's going to break one way or the other. The top of the range is let's call it 355, and the bottom of the range is 340. So I probably wouldn't do anything here either. But if we break out to the downside, we got this gap we could refill. That's when you can think about the cold ETF, KOLD.
Yeah.
All right. So yeah. So we saw consumer staples. XLP. Now you see how this looks like it's breaking out. So what we can do is we can go look in the consumer staples sector for what companies are in there and look to see if we can find something that's breaking out.
Gas is US. No, for
UNG.
Yeah, UNG.
And then the inverse ETF is KOLD.
Yeah. And if you're bullish, it's BOIL, BIOL.
Yeah, UNG tracks natural gas. BOIL is designed to move in the same direction by twice as much, and cold is designed to move in the opposite direction by twice as much. So if that support starts to break, then you start looking at cold. Or you can buy puts on UNG, whichever fits your style better. But anyway, it looks like Super Staples is breaking out. Procter & Gamble, though, it's pretty close to resistance. I don't think I would get into that one. Costco is next. Range bound, right? Walmart. They just closed Walmart in North. Supposedly it was the busiest one in the country.
Wow.
Yeah, I mean this could be a potential breakout here.
Hey, Mark, real quick, did you see that thing I sent you on Bridgeport, Connecticut with the ballot stuffing?
Yeah,
That's crazy.
not surprising though. Bridgeport's really corrupt city. Matter of fact, their Mayor Ganem, when I think he
Ganem, so he's doing it Ganem style. That's
I
Gangnam.
think he was
Sorry.
the mayor for like 8 years, or he was the mayor, and then he went to jail for like 8 years, and then he got reelected. Um,
Oh, Marion Barry style.
yeah, remember that bitch set me up. For those of you who don't remember, when he got
Buses with the hooker in the hotel room in
yeah, the
Washington
FBI
D.C.
had him, and as soon as the FBI busted, he's like, "Yeah, bitch set me up." But I got to admit, I kind of like this guy. So this is him here, and I'll tell you, man, he's been doing a really good job. Bridgeport was all right. So he was mayor from 1991 to 2003. Wow, that's a long time. And then he went to jail for some conviction on corruption charges. Uh, so let's see. He resigned. He was facing 126 years. Oh, he served his sentence at Fort Dix in New Jersey. Anyway, so he gets out after 7 years in prison and he gets reelected. But dude, Bridgeport is really undergoing a transformation. Bridgeport is like a really, like, oh, Easton. I know people live in Easton. Like, that there's that show, Live Patrol, or they used to call Live PD before all this stuff with the Black Lives Matter. Now it's called Live Patrol. Well, they used to have that coming from Bridgeport, and it would be funny because it'd be on like Friday night. It's like, it's like, okay, we're coming to you from Atlanta, Georgia, where police officers are busting up a teenage drinking party. It's like, okay, we're coming to you from Bridgeport, where the SWAT team is responding to signs of automatic weapon fire. Like real bad. But then the mayor or the president of Bridgeport University put a lot of pressure on the mayor, like, "Hey, man, we can't have the show here, or else no one's going to come here." But anyway, yeah. So that's Bridgeport. You get these little cities, and it's like, who's overseeing them? Who cares what goes on in Bridgeport? Who cares what goes on? People are going to oversee Boston. People are going to oversee, New York, but no one cares about like some little 50,000 person city. So these guys can get these like little fiefdoms. But anyway, that's my boy Joe Gannon. You gotta come on, the guy went to jail for 7 years.
No, you got to give it to him to go out there and have the cojones to stand up there and get yourself elected again and say, I can do the job. I mean, and after you've gone to prison for corruption, that's crazy. Hey, don't forget XLU.
All right. Well, anyway, I would be looking at this for the consumer staples play, because we could have a breakout. And when we break out, we got resistance, right? Big group of sellers. We get above that, it tells us those sellers are gone. So what else is in staples? Yeah, that looks kind of in between there. I'm just kind of, let's see, Pepsi, Coke, which I don't know why they're staples, but whatever. Pepsi's made a nice turn. Well, I think my idea here would be so far Walmart. And then for XLU, see, if interest rates keep going down, this is going to keep going up. And you can see it's up again this morning. And that's because people buy utility stocks for income generally.
Yeah.
So if interest rates are going up, people are going to sell their utility stocks like here and go into the bond market. And if interest rates are going down, people are going to sell their bonds and move back here to the utilities market. So this is breaking above this. And we talked about this yesterday as a potential trade. And I mean, so far, look how well it's worked out. So we talked about it yesterday in the pre-market, and it was like 58.5. So it's up $2 in one day. So, and I think it's got some more room to run here. So this, I think, would be another thing I'd be looking at. Walmart and Walmart on the Staples breakout, and this, if interest rates keep going down, this is going to keep going up. Lincoln, what an ass. That guy is such a jerk. He can't even speak. It sounds like everything he says is a question. Because you know how like the way we speak proper English, when you say have a question, like, "Hey, what did you do yesterday?"
Right.
It's like he asks a question. It's like, "Hey, what did you do?" Ooh, yeah, do.
Yeah.
Hey, it's like you can't tell if he's asking a question or if he's making a statement. And he's the guy that was behind that whole fake thing with all the Russian disinformation. He's another ass that should be in jail.
Well,
Anyway,
I mean, sometimes they're eventually. I don't understand how they can't be, but I mean, I don't know. Maybe there's too many of them to catch.
God, it's just the sheer incompetence. It's just really. It's like you don't even know what it's almost like it's hard to comment on the policy because you don't know what it is. Every day it just changes. You know,
Yeah.
it's just really I don't know. I think Americans should really be ashamed of what's going on right now. And and even if you don't like Donald Trump, it's like, come on, man. They're just making up shit to charge this guy with because they don't like him. It's like, oh, I'm a federal prosecutor in some state, but I'm just going to throw federal charges on someone just because I don't like them. So it's a really bad precedent. And I mean, the way they threw around this impeachment, like it was like this, it was such a friggin' joke, like, oh, the president's not allowed to call another country, or he's going to get it. Or what was the first impeachment for? I forget.
Russia collusion.
Oh yeah, the Russian collusion, which really never happened.
Right. And the second one was the phone call because he was fixing to peel the lid off of the Hunter Biden corruption scandal.
Yeah, and it's like the whole. It's just really kind of pathetic, and I do have to get going, but it's just pathetic how the story. Oh, you know how you can tell Biden lies because he's such a bad liar. Like he'll just stare right into the camera and be like, "Oh yeah, so we're doing this. We're going to go to the beach, and I'm going to ride my bike." And when I was a kid, I used to drive a tractor trailer. And I may be Irish, but I ain't stupid. And sir, did you ever speak to your son about his business skills? No, I have never spoken to my son about his business skills.
Putrino, you're killing me. That was good though.
But
that was a nice setup. The whole thing.
Like, why didn't he just say, "Yeah, we've spoke about our business dealings"? Next question. Instead, he's like, "No, I've never spoken." But I guess we can get away with this stuff or something. You know what? All right. Here's where I'm going to end this.
Hold on, I just want you to look at
I hope he lives long enough and is coherent enough that when he gets brought down, he knows what the hell is going on.
Yes, sir.
All right, everybody.
About IWM real quick.
Oh, IWM. All right, so that's our small cap ETF, the Russell 2000. And this probably has a little bit of upside in it as well. Yeah, so we got a nice strong move here this morning. So you see how this 169.50 level, we're back above here. So we're up to about 172.50. So I think this has some room to run as well. And once those other sectors we looked at, remember, this is mostly healthcare, the Russell 2000. So if you're looking at the healthcare sector,
Wimmer, that's from 60 to 65 is that level. I mean, that range on NEE.
So where are we here? 127 to 20. So a big part of what's going to go on in IWM is going to be decided by what happens over here. Because IWM is, even though it's small cap, I think it's about 20% healthcare.
Please tell him happy birthday from us, Jeannie.
Oh, cool. I'll have to send him an email later. Yeah, so I think IWM has a little bit of room to run. Maybe 175. Next stop. So it's up another $2.50, another 1.5%.
All right, everybody. Have a wonderful weekend. Is there any more questions?
Yeah, and we'll see you all on Monday.
All right, guys. Have a lovely day. Thank you very much for spending your morning with us, and go make some money today, huh?
All right, everyone. Thank you.